Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 26th of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And another pretty quiet session as far as the world's global foreign exchanges are concerned. Really just one or two price movements, I should say, of note worth commenting on, and that is the continued pushback from both the Australian and New Zealand dollars against their US rivals. The Australian dollar putting on 0.24% against its US rival, and the Kiwi adding 0.32% against the US currency. Dollar index for its part largely unchanged overnight, 94.16, trading shortly before we recorded the video. That was up 0.03% on the day yesterday, but well off the peaks that we saw, of course, early last week. Right, let's take a look now at what's on the calendar, events that may move the markets, and we'll find an explanation as to why markets are so quiet when we look at this calendar. We've already had activity outlook and business confidence data out of New Zealand for the month of September, and both of those reads appear to have improved significantly over the prior numbers. To come at 06:45 GMT, we'll have consumer confidence data for September out of France. At 8 o'clock, we'll have the ZEW survey, the expectations about the Swiss economy for the month of September, and then we're over to the UK for 8:30 for the release of the British Bankers Association mortgage approvals data for the month of August. At 10 a.m. we'll hear from the CBI, the Confederation of British Industry, and their distributed trade survey data for the month of September. And then an early announcement from the States at 11 a.m. GMT. We'll hear MBA mortgage applications for the week of September 21st. And at 1300, the Swiss National Bank produces its quarterly bulletin, always worth a read, of course, because the Swiss National Bank is the central bank that is run like a hedge fund. Okay, at 1400, we'll have new home sales data for August out of the States, and that'll be followed at 1430 by the crude inventory stocks data for the week of September 21st. All eyes, of course, on Washington, D.C. today at 6 p.m. GMT for the FOMC decision on interest rates for the month of September. And really the markets, I think, on the tenterhooks ahead of this announcement. Of course, we'll have the decision itself and a speech from Jerome Powell with a press conference to follow at 18:30. Not the only central bank reporting, however, today. The Reserve Bank of New Zealand is also on the podium at 2100 with their own interest rate decision, rate statement, monetary policy statement, and press conference at 2200 GMT. Okay, let's take a look at breaking news and comment that's caught my eye. And first of all, Donald Trump threw down a gauntlet to world leaders in his UN speech yesterday, bringing the oil price rally to a halt. Not only did he harangue OPEC, he had a good dig at Iran, and he also spoke about countries having to pay up for their own defence, and that America would be putting itself first on those and a number, I should say, of other issues. Meanwhile, the Asian Development Bank has maintained its growth forecast for the Asian region, but has highlighted what it calls trade war headwinds. And the head of Argentina's central bank, Luis Caputo, resigned after just 3 months in the role, and right in the middle of talks with the IMF over the release, or early release I should say, of bailout funds. So IMF must have been surprised by that, and EM problems, whilst they're not grabbing all the headlines at the moment, they're refusing to go away. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? As the Federal Open Markets Committee gathers in Washington to decide on the levels of US interest rates today, Bloomberg has flagged the decline in negative yielding debt around the globe, which has halved since June 2016. A sure sign, if any were needed, that interest rates are rising globally with or without the help of central banks. And you can see the declining is quite sharp really in the amount of paper around the world that yields less than 0%. Rates are rising, money is getting tighter, and the markets and businesses are going to have to deal with that. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about the suitability of leverage products for you or the risks involved in trading them, then please do contact your Pepperstone account representative. And as I say, please do take a moment to read this risk warning thoroughly. Thank you for your time today.